Morning, everyone. This is Chrissy from Solstice ATR, and hope everybody's doing great. You can find us on the web, on Twitter, or Discord. Remember, this is for illustration use only. We're not a broker dealer. Past performance doesn't indicate future results. Today, I will be covering the overall market. Number two, it's a short week because Monday's a holiday. There'll be a short period in the morning for trading the futures, but the equities are closed in the banks. Before we can get started, I want to make sure that everybody understands that the market is basically going to be looking at different indices and different instruments to whether the market is going to be heading south or continuing to the upside. Most people are bearish on the market due to the fact after January 20th, the presidency, the lockdown of the COVID-19, the vaccinations, and some instruments are showing a little bit more weakness, some are showing a little bit more strength in them. What I want to do is basically take a look at what the averages are, the breadth of the New York Stock Exchange, the overall large cap tech sector NASDAQ 100, taking a look at a couple of ETFs with Bitcoin and the VIX and small cap, taking a look at the indices and make sure as a trader when you first start, the most important rule is protecting capital. Don't be wrong. Let the winners run. Act fast on action and reaction. That means when you see a trade is setting up, don't question the move. Get into a trade, know where your stop is for the long or the short, and just don't hesitate. Use Fibonacci levels, channels or linear regression channels. That means if the channel is broken up or broken down, they usually give you a good move up or down using technical. And don't listen to the noise. And if you want our assistance, ask us how. The next thing I will be covering is basically the volume profile. I am here using the monkey bars. And what I wanted to do in this illustration, basically taking a look at the S&P 500 for the last, here I'm showing 15-day range. Last week's range was 4 days range, and on Friday we fell down a little bit, but the POC never immigrated lower. What does POC mean? Point of control, where most contracts are sold. This is that orangey burnt purplish color. Value area high is basically that shadow area in here, the highs and lows. That's the value area high. Value area low is the shadow area down here, the low. And the time was spent, where most of the time spent sometimes is not similar to the most of the way contracts are sold, the POC. So sometimes you get value area high and value area low different than the value area high and low where the contracts where point of control is. So you have to understand where they are. The square is basically where the open is. You can see a square right here. And the close is usually the triangle, and I left this one here to show you where the close is, so you get a little triangle. If I zoom into it, you can see it a little bit more. So you can see the triangle is the close, the open is the square, the value area high is the shadow up here, the POC is where the most contracts are, and the value area low is the shadow down here, the low, and where the time spent is that green shadow here. What I've done, I've taken a 5-day range because we were inside the range of the prior week's information. We looked up, we broke up, consolidated, we eventually fell down, but the POC never immigrated to where the close is on Friday. If I zoom in here, oh, it doesn't show it here this way. Okay, so it basically looked up, opened here, came back down, and we closed down in this area. So make sure to trade what you see, not what you think, so you don't get caught in the trading. So that's how we use the POC, and I will go over some other instruments a little bit in detail on the breadth and other stuff. Let's just first start by taking a look at the other instruments. I have here SPX, NASDAQ, the Russell, and the Dow. As we can see on the 3-month, 90-day, 4-hour chart, we have been grinding up, and then last week I've measured the Fibonacci from high to low from the December 1st till December 30th, which is the high here. Then we eventually broke on the first the month. We looked up, continued higher, we consolidated, and eventually in the last day or two we came back in. We are in the prior breakout. We stayed on the combination of those 4 instruments above the annual high. We have a fib from high to low from Monday through Wednesday, through Thursday, where the highs and lows are. This is the Fibonacci. That's the 50%, the 38. It's going to be very critical area in order to continue back up to the 61A in order to break up. And if we fall through this area and we fall through the prior annual high, you look for the 50 simple moving average and the extension of the fibs, and that would be 2.5 standard deviations going down to the 161. I am not bearish. I'm just giving you a fact. If you look at this chart, that looks like, it broke the down channel. But if I put a minus sign in front of all these instruments instead of a plus sign, watch what's going to happen. So basically, what I've done, instead of combining the instruments to the positive side, that will give us an idea that the trend, when you put a minus sign in front of it, it'll give you a reverse, like a wedge coming down from the bottom. It's the inverse relationship, like it's losing its exhaustion at the bottom, trying to U-turn back up. This will, push higher. If the sentiment is bearish, that will, break up, and that would be like a bullish, bottom, reversal. And that's why I use the minus sign to show you that you can do inverse relationship to a chart from being bullish to bearish, and be able to, if you cannot trade the short side, just flip it by putting a minus sign in front of it, and it will allow you to see what's happening in the overall market. Let's first of all take a look at the RTY small cap. I'll start with the small cap first. In the small cap here, this was the annual high, which was right here. We broke up. We looked at the 61, at the 50% fib and the 61.8, and we eventually fell back down inside the prior, this was the prior week range that we broke up. Then this is the last 4 days we grinded back up. On the 5th day, we fell back down on Friday, but we tested the 61.8. I have a small linear regression channel between these two. Do we consolidate down to the 50 SMA, or do we break this channel to come back to the 61.8, or do we go back and reverse and go back up? The small cap have been a little bit stronger, but you have to keep an eye on the banking sector with small cap, the BANK, or the XLF, or you can take a look at the inflation area right here. So let's now move on to the YM, the Dow Jones Industrial Average. Dow Jones average was a little bit weaker than the S&P. Weaker than the Russell. As you can see, the consolidation in the last 4 days, we retested and broke further on Friday. We have an up channel. We are in an open cone. So what I did 2 of them. We have a 116 SMA. We have a down channel here. Do we stay up in this linear regression channel, get a bounce off the 200 SMA to continue higher, or reverse if we cannot clear the 61.8? That's very important. Trade what the charts give you. This was the prior week range before the breakout, and that was the top that we had. Then we eventually broke up. We looked inside, tested the range of the breakout, which is this area here. If we stay below it, we may continue lower, or you can put a minus sign in front of it so you can see the pattern of the opposite in relationship to the move up. Does it break up to continue higher, which means it's bearish to come back to this area before continuation back to the other side. That's the Dow. Let's take a look at the NASDAQ/NQ. You can see the NQ was a little bit in the NASDAQ 100, especially like Amazon, Google, Netflix, Tesla. We can see that they are a little bit exhausted. Microsoft, Melly, Alexian, Veritex, AMZN, Navida. So I'm just kind of naming names, Wing Resort. So we have to be open-minded if there's going to be a change in the trend. As you can see from the prior week, on that Friday we pushed higher, then Monday we gapped down. We fall in Monday, Tuesday, Wednesday we come back up. Thursday we couldn't, take the prior, week high, then we fell down on Thursday a little bit, and Friday we followed through. We are in a linear regression up channel, but we are in an open cone. If this does not hold the 200 SMA or the 89 EMA, we look for the extension to the downside. If this U-turns somewhere here and goes back up, we have to keep an eye on the 61.8 area in the NASDAQ. So if I look at the NASDAQ, is trying to break out on the downside, but I am not bearish. I'm going to trade what I see. Let's take a look at the ES slash ES. This is a similar situation on Friday. The POC, remember I said, hey, it didn't immigrate lower. So let's take a look at it. We consolidated, we broke out of here. We looked up, then we came back on Monday, Tuesday, Wednesday, Thursday we fell down. Friday we gapped down. This is a virgin control point POC that we never tested. And we have another POC up here in the profile from Friday that never immigrated below that 3771 area. So we have to be open-minded if there's going to be a change in this channel here at the 2338 50 or 61, or the double extension, the 3668. That's going to be a very critical area. Or do we hold this channel and go back up to the 61.8 and break out of the wedge to continue higher? So we're going to be looking what the market gives us, not what we think. Okay, that's very important. We're going to go into the profile here. Instead of going to style, we're going to go to the monkey bars. And the reason why I put this on a 20-day 4-hour to show you from the prior weeks, we consolidated, we went sideways, broke up, consolidated, tried to look up, we fell back in, consolidated, we eventually broke out of here, then we looked up, then we had 4 days range and we fell in. Does this Fibonacci hold us intact in relationship to this profile where we broke out of? This was the annual high for the year, which is 37.53. Are we going to be below that area, or are we going to continue lower to the 36, below the 41, then go to the 23, then go to the 3700, then eventually, the 3690 to get a nice bounce back up, because there's a lot of time was spent here. But this is a very important area because on Friday they sold up due to the long weekend. That's what I'm thinking. But be open-minded that there may be a change, a reversal, because it's got oversold too fast. And if I go to the 15-minute on the profile, I'm going to show you how it looks like. This is the Virgin Control POC. There's this one here. We closed at the 46 quarter after 415 because the market reopens for a little bit and closes. Do we continue lower or do we reverse? That's where the most of the time was spent. That's the POC. That's the value area high. That's the value area low. Do we retest the value area low? So that's how you use the monkey bars in relationship to being higher or lower. Let's go back now, take a look at different instruments. We're going to go from style. We're going to go standard. We go back. We are showing 90 days here, which is very nicely done. You can see that was the prior, consolidation in this area. Then we eventually broke up. Let's take a look at now AAPL, and I'll come to a couple of electrics and a couple of BTC. As you can see, Apple was looking higher. This is a very important. It lost the 128 area, 127.60. The 128.28 is very important for me. The Apple fell down in that M shape or an H pattern, if you consider this an H, and this area, if it doesn't hold, I'm thinking the backside of this extension would be, because this was the minor consolidation. We tested this area, bounced up, came back, retested this prior breakout, went up, couldn't hold it, and then we're coming back in. Do we continue to consolidate back in this range to get a bounce back in Apple? That's Apple. Let's take a look at Amazon. As you can see, it's been consolidating in a down channel. We have this high here, we have this low here. It eventually broke that symmetrical triangle pointing lower. But if I zoom in on the last week's action, as you can see, we have not been able to take this prior consolidation where it looked up, came back in. This is, resetting. Do we fall further down to the backside of the channel, or do we come back up, break above this channel and the 50 SMA? Be open mind to change in the market. That's Amazon. Let's take a look at Facebook. Facebook, as you can see, it looked down, came back up, looked down. Does this hold this consolidation in this area here? Oh, does that FB? Oops, I'm sorry, that's not Facebook. Oops, what am I looking at? AFB, I'm sorry. Facebook, as you can see, I was looking at it, didn't look right. Okay, so Facebook eventually lost that prior 264. If this area does not hold the 244 in Facebook, that's going to be a very critical area, because on the monthly Fibonacci fibs, we have lost the extension to 61 on the monthly, because we had the high and low. That was the zero line. We tested the minus 23, the minus 38, minus 50, minus 61. We do have a 78 down here. We have 100%. If Facebook is going to turn, it has to come back up through the 50 and the 61 in order to continue higher. If it cannot get through there, then Facebook has a little bit of issue to the downside. Let's take a look at Google. Google has been consolidating in the last month, month and a half, 2 month inside the range. We have to keep an open mind on this gap here. If it does not fill it, that's very important. If it's going to continue higher or come back down, that's Google. Let's take a look at NFLX. Netflix, you can see it was consolidating, trying to go higher, and eventually it went into last man's retracement of those fibs. It got to the prior extension, the 100% of the move back up, fell back in, and we are trading below the 61 or the 38.2 fib. If Netflix cannot hold this area and you turn back to the 50 and the resistance area, and it falls back to the backside of this channel, we'll look for the backside of this consolidation down here before it's taking off. That's Netflix. Let's take a look at Tesla. I won't go through all of them, because you can look at NEO, and other stuff like that, similar to Tesla on electronic cars such as Volkswagen, General Motor, Ford. I'll do General Motor, that way you can see on the upgrade. Tesla looked up, came back in, consolidated for the last week or so, and on Friday it fell down. You got to keep an eye on that 50 simple moving average, if it's going to hold that range in the last 5-day range. If not, you look for the extension of the 38 and the 50 Fibonacci, where it eventually broke out, and this is your annual high for the year in Tesla. Let's take a look at BANK. That's the bank sector. The bank is, 28% of it consists in the small cap, and you can see that the bank continued higher. So we're going to be open-minded to keeping an eye on the bank if there's going to be inflation or currency wars between domestic and international countries, and due to the COVID and the vaccinations. Keep an eye on the bank, what's going to happen in that area. Let's take a look at BTC. The last 2-3 weeks, I'm going to just take the monthly Fibonacci extensions that we did. That was the monthly. The purple area went to the extension to the 61. We had the weekly fib. This was the annual high. We went to the 23, 38, 50. We looked at the 50, couldn't hold it, fell back down to the 31,000 in one day overnight gap. Well, I mean, that margin went like from 38,000 always to 108. The margin is about $96,000, 91,000 right now. It went back up, came back in, consolidated, looking back up, came back in. It's in this channel. If it cannot hold this area here from the prior week support, this is your 116 SMA. I think because of this area, you got this gap and you got this gap here. This is a major consolidation, break up, consolidate, break up. If it cannot hold the 61.8, be careful of it, because you can come back to the support area, the 116 SMA, then the 200 SMA down here where the gap is before continuation, because this was the annual high on BTC last year in 2020. So that's BTC, or you can look at the ETFs. If you cannot trade it, you can look at GBTC. That's an ETF for Bitcoin. You cannot short it, but at least you can, on moves down, you can go into it on that side. If we look at the bond market, the Z, you can see that the bond market started spiking down. The price of it, the par value, fell further. So when it falls down, that means interest rates is going to spike up. The Federal Reserve Board are going to keep pumping money into it, $1.9 trillion into the system. Does this balloon eventually break? Possibility. They did it in 2000, they did it in 2003, 2008, and now they did it in 2020, and they still want to print more, even on the new elected president. That if he's going to end up being in the White House, are they going to print more money and the Federal Reserve going to be supporting that, or are they going to increase interest rates? This is why there's a lot of volatility in the currency and the VIX. Let's take a look at the /VX or the VIX. It doesn't matter which one you use. That's the ETF. I'll use it here. As you can see from last month, the last couple of weeks, we had a couple of spikes up, come back down. This is the London lockup. Then we spiked up again. We fell back in. We spiked up to the 25, fell back in, and we spiked back up. I did not re-anchor the weekly Fib from last time. So what I can do is remove this Fibonacci, remove the drawing. We can take a look at the last 5-day range in the VIX. So we can go to the Sunday range. This is Friday. If we come here, this is your high and this is your low for the year. So what we can do is grab a Fib. We can point it up. You can see that the machine did grab it, but I'll do it manually. So when you're trading, you connect this bottom here. This was the weekly low. This was actually Friday, by the way. And this is the weekly high for the week. Connect it, and we can see if we stay above the 38.2 Fib. Let's just zoom in here. So you can see it. That's a very important area. If we stay above the 38.2 Fib or the 61.8 in order to continue higher, and it falls back in this range, watch out, because the trend does usually change. Trade what you see on the charts, not what you think. And I'll show you the slash VX as well, because I keep an eye on the VX, the futures, instead of the regular one out there. And you can see similar situation. I took the prior week, I didn't re-anchor this one, drawed it down, we came back up to this area. So this fib is no longer valid. Remove the drawing. And what you do, you look at the weekly range from Sunday through Friday, and we anchor these, and that would be the anchoring for the week. And what you can do is right click here, edit properties, and what you can do, extend it back to the 10th. That would be the Sunday date from Sunday through Friday range, high and low. Your 38% is very important, the 24 area, and the 50%. We do not want to lose the 23.39 for the bears to come in. If you lose that, then eventually the trend changes to the bulls. If you stay above that 24 area and you clear the 25, look for the extensions to the upside. That means there's a little bit more bearish tone in the market. So that would be it on the equities. Let's just go back to the ES. And what I want to do here is basically show you a couple of things in the overall market, the moving averages and stuff. I want you to basically freeze each chart and be open-minded to what I'm showing you. Don't think that I am biased to one side. Let's just go back here. Okay, we're going to go here. Okay, this is good. Okay, here I'm showing the S&P 100 using a 150-day moving average or simple moving average. In 2002, 2003, when the market got hit in 2000, 2001, it took us till 2003 till we recovered. That was one scenario that the 150-day moving average was below, and the S&P 100 continued to be a lot stronger. We had ups and downs in a shorter period of time, but we continued higher. In 2009 was similar situation. By 2010, we recovered, correct, 2008, 2009, then we recovered. We hit the same situation. The S&P 100, 150-day, a lot of the 100 stocks are above that 150 simple moving average. Similar scenario in the pandemic in 2020 from February till March. From March till end of the year, we continued higher. We have a similar situation that the 150-day moving average on most S&P 100 stocks are above that moving average. So be open-minded if there's going to be a change or not. Let's go to the next one. This is the NASDAQ. Similar thing, using the 150, showing 2002, 2003, 2008 to 2009, the spikes, 2020. This was the 15 election, in France and all that, in the UK, Brexit exit. This is the pandemic, and now we are up here. So be open-minded if there's going to be change or not. Take a look at the New York Stock Exchange using the 150-day moving average, similar situation, as you can see. And that's the S&P 500. Last but not least, I'm showing you the drawdown and the draw ups, how many days we can stay below and how many days we can stay above. If we can take a look at all these scenarios, I did not use the S&P 500 or the NASDAQ composite. I used only the NASDAQ 100 and I used the S&P 100, the New York composite. I didn't go through each one by one because it'll take too much time for me to cover all the S&P components, the NASDAQ and New York Stock Exchange. If we take a look at the drawdowns, how long did it take a drawdown? Maximum drawdown was about 8%. Minimum drawdown was about 0.7. If we consider that there can be, volatility during a short period of time, taking a look from now till a year from now or 2 year or 4 years down the line, this is our average rate of return over time. And our medium range is 58. Our maximum range is 64. So, and we can have a drawdown in between. Does that mean that the market can continue higher? Yes. Or can it go down? Yes. So be open-minded to change. Don't be biased. And this is the reason why I put this chart up for you to help you out. These are hypothetical. Look forward to seeing you on Discord or Solstice ATR. Check us out. This video is always on weekly basis, free for everyone. You can subscribe to YouTube and take care.